tonight what we're going to do is that we are going to have an interactive session where I'm going to actually ask some questions to Amaresh, who's the fund manager of the Pepper Club, and hopefully we can tease out a whole lot of different answers and questions that can inform you guys about the Pepper Club so that you can actually make an informed decision as to where you want to invest. So before I forget, we welcome all you guys here this evening, as well as our listeners or viewers on the webinar. It is a recorded session, hence, and also we have some live visitors, so hence we had to have a hard 6 o'clock start in order to be respectful of everybody's time. So just a little bit of background is that Section 12J is, have we got a problem there at the back? Section 12J is an investment opportunity, is an alternative asset class that was introduced by Treasury probably 8 or 9 years ago, where it allows investors to invest into a Section 12J investment recognized with SARS, where they would be entitled to 100% deduction from their taxable income in the year in which the investment was made. So just so we all understand, taxable income is made up of the salaries that you may earn. It is made up of interest. It is made up of rentals. It could be made up of stock trading that you might, share trading, or any other income or side businesses that you might have. It's made up of capital gains tax. So one needs to be aware that you would have to accumulate all those pieces in order to determine how much taxable income you have, and one could then shield it by investing in a Section 12J investment. So I think just also a little bit of housekeeping before we start. The cloakrooms or bathrooms are out the door. The men's are down the passage on the right, and the female bathroom is in the corner. In the case of the emergency, I just storm through this door over here. Okay, I know play. Okay. So what we're going to do is we're going to ask Amaresh, welcome. I hope Amaresh is a director of Pepper Club. He's also the fund manager of Pepper Club, and we're going to ask you a number of questions.
Thanks, Jeff.
So firstly, Amaresh, who are the promoters of the Pepper Club?
So the promoters of the Pepper Club are the Solomon Brothers Property Group down in Cape Town, and Grovest, who are hosting us here this evening. The principals behind the Solomon Brothers Property Group are three brothers, David, Jeffrey, and Irving. They've got a 40-year track record in real estate across all sectors: industrial, hospitality, office, residential. And the promoters behind Grovest are Jeff Miller and Malcolm Siegel. All the directors have got a long history with public companies. David and Jeffrey from the Solomon Brothers have been on the board of APROP. They've also been on the board of Redefine. Jeff Miller has listed Brandcorp. Malcolm's been involved with SASFIN. I see our chairman is here tonight as well, Mutlem Khasi. He's one of the co-founder and chairman of Vantage Capital, which had 8 billion under management. And yeah, I'm the last director. I was part of the team that put together the bid for the National Lottery. I was also involved in property transactions.
Okay, great. So what you're telling me is that we've got a competent board.
Yeah, we might do. I might be biased.
Okay. So, Amaresh, the Pepper Club is a hotel that's 10 years old, established in Cape Town. Why don't you tell us more about it?
So the hotel is well located in the west city of the Cape Town CBD. It's bounded on one side by Long Street with lots of nightlife, and on the other side it's got Loop Street. Pepper Street runs along the side, hence the name. Bree Street is one up, which has again got lots of popular restaurants. The building itself, it took 5 years for the promoters to assemble the site and put the construction up. It ultimately opened on the 15th of March 2010. It's traded for the last 10 years. Every single year has been profitable. It's a 22-story building with 200 plus rooms. It's got a movie theater, a sidewalk cafe, restaurant, spa, pool. Did I say the cinema? It's a good offering.
Okay, so just just so that we're all on the same page, it's an existing hotel, 10 years old, with a track record, 60% plus occupancy, no development risk whatsoever because
Correct.
it's up and running.
Correct. So no construction risk and a good track record. You know, it's not like it's already been built, but you've got to wonder how the guys will fill it up. It's averaged 60% over the last 10 years. It was even profitable through the years when tourist numbers in Cape Town dipped because of the drought. All those numbers are in your comprehensive info memo.
Okay, great. And I think it also, how many rooms are there? I think there's about 200.
A shade over 200, yeah. So
spa,
73,000 room nights.
gym as well.
Correct, yeah. Sidewalk cafe, the Copa restaurant, Ruby's.
Okay, so this particular investment is targeted at individuals or trusts or companies for trusts and companies that have taxable income in excess of 1 million rand. There also is a cap for investors, individuals and trusts that can only invest 2.5 million per annum, and companies for 5 million. What should an investor who wants to invest into the PepperClub consider in terms of their taxable income before they make an investment?
So this is not advice, but my personal view is you should probably do the maximum that your taxable income is, for the simple reason that we prepare to vendor finance you completely. So there is actually no cash outflow. You can shield all the income up to the limits that SARS allow.
Okay, so where I'm really going, I think this is, no prospectus has been issued. This is an investment memorandum, and investors who want to take advantage of this particular opportunity should earn 1 million rand or more, or have taxable income of 1 million rand or more in order to take advantage of this opportunity.
Correct, correct.
Okay, so listen, I think we've got into a little bit of background. Why don't we play the movie, because I think a picture says 1,000 words. Okay, so I think picture always tells 1,000 words. I think it's a nice little little video that gives some sort of indication of where, what the PepperClub is, what it offers. There's a couple of slides in there that talks about various numbers. It talks about an average operating yield of 7.6%. Can you explain that?
So the promoters have the courtesy of their strong balance sheet and the trading history of this property guaranteed a minimum operating yield of 6.5% in year one, and they've given you contracted escalations of 8% per annum over the next 4 years. So the 5-year period for which you're required to hold these shares in terms of SARS rules, that's where you get the 7.6%. It's the average over that period.
Okay, so just for clarity, is that that would be the operating profit before tax that the hotel actually makes, which starts at 6.5% of the of yield and grows by 8% per annum for 5 years,
Correct. That's exactly right.
and guaranteed by the Solomon Brothers Group. Should the yield drop below that, they would top it up.
That's right.
Okay.
It's also worth pointing out that that's on 100% of the capital, not the risk capital.
Yes, 100%. So what we're talking about is now the operational hotel needs to generate 7.6% yield, which is the trading profit before tax.
Correct, yeah.
Okay, so I think that's clear that there is a guarantee for 5 years by the Solomon Brothers Group. And obviously that's a minimum. To the extent there's any maximum, obviously the investor would benefit. But to the extent that for whatever reason there's another drought or something happens, they would top it up to meet the minimum guarantee.
How's that income reflected in the individual's books? Is it interest? Is it dividend? Is that gross dividend? Net dividend?
So what would happen is that the hotel would make a profit. Dividends would be declared to. There's a hotel partnership which runs hotel, which is accumulation of all the hotel rooms as well as the restaurants and all the other facilities. That dividend, the profit made by the partnerships, gets divvied up to the qualifying companies, and in turn would then divvy it up to the PepperClub VCC, who would then pass a dividend back to investors. So like the history of the hotel, that he has been making around about 30 odd million a year, and that would hopefully continue, but guaranteed to grow at 6% per annum. 8% per annum. Excuse me. So the valuation of the property, the property has been valued around about close to the 500 million rand mark. Can you just give some background on that?
So we asked ACOM, who as an independent firm of quantity surveyors, to value the property. They've come up with a valuation, as Jeff says, of roughly 497 million. So there's maybe a 10% discount in it because the company's capitalized at 450 million, 450,000 shares at 1,000 rand a share. The directors are hanging on to a third of those shares, and 300 million rands worth of shares are being placed.
Okay, so, so 500 million is a big number.
It's a big number, but again, we're financing it all. So all you need is taxable income, and we'll finance you.
Okay, great. So let's just explore this finance option. As I understand it, anybody who has a taxable income of more than R1 million is eligible to actually acquire or subscribe for shares in the PepperClub for R1 million, up to R2.5 million in the case of an individual or trust, but in the case of a company, up to R5 million. And the vendors, which is a part of the Solomon Brothers Group, would actually fund the investment into the PepperClub. Is that correct?
That's correct. Should I explain the structure in detail?
Yes, please. And
Okay.
the back there wants to hear.
So we would lend you 100% of the subscription price. You'd get 2 loans, a bridge loan for 45% and a term loan for 55%. The loans carry the same interest rate and the same security. The only security we take is a cession of the shares which we've lent you money to purchase. And that's generous. I mean, you guys have tried to borrow against listed shares. You know your banker wants 2 or 3 times cover. You're not going to get it at 1 times cover. The interest rate is very fair. It's at prime, which is a good rate. The reason for structuring it as a 45% loan and a 55% loan is we say to you, please subscribe for the shares, let's say this week, next week. You put in your tax return at the end of the tax year, and simplistically, your cost to company was R1 million. You've subscribed for R1 million worth of shares. We would now expect all your PAY to be refunded. Let's assume that was at the 45% bracket. The minute you get the refund, we would like that to pay off the bridge loan. The term loan we'll leave for 5 years. We don't expect you to service principal or interest. we will sweep the interest that you earn through the guaranteed income, the 7.6% average we spoke about, so that the interest bill doesn't roll up. And by our estimations, at the end of 5 years, your 550 may be 600, 620. And at that point, there's a number of options to settle that debt. But for the avoidance of doubt, should there be shortfalls, we will roll it. We don't expect you to top anything up.
So just again, for clarity, is that there's two loans. One is the bridge loan, which is probably a 6 to 8 month loan, while the investor is waiting for his return of PAYE or provisional tax that he may have paid previously. And the second loan, which would be 55% of the investment value, is a 5-year loan, whereby the investor will receive over the 5 years a guaranteed of 7.6 operating yield, of which, of course, there is some tax attached to that. And then, and against that would be the interest, which currently is at 9.75%, which you would be charged.
That's right.
Okay. And at the end of, assuming that with the guarantee and there are no changes in the interest rate, and that the hotel didn't exceed its performance of 7.6, which we obviously anticipate it will, is that at the end of 5 years, there would be probably about 620 owing by the investor.
That's exactly right.
And he would have, by that stage, received the 450 tax benefit, and I know that also the benefit of some free rooms. But I don't know if you want to talk about that now, but you can, we can talk about that a little later. So now this is all great. Now we come to the end of year 5. Okay, what are the options for the investor?
So the first option is that it's a very real possibility that the company is listed on the JSE's AltX. I've just told you that everyone on the board has got listed company experience and property experience. Option 2 is a trade sale of the hospitality assets to a hospitality group. Option 3 is you simply exercise the put. We give you a put to sell your shares back to us, and we can explore that in a bit more detail shortly. And the fourth option is that the underlying property, the 497 million rand piece of real estate, is completely unencumbered. There is no mortgage bond on it. So when you invest, you've got encumbered shares in an unencumbered piece of real estate. It's not inconceivable that the directors may decide to gear the property slightly, say 50% LTV, loan to value, distribute the capital to the shareholders and let the shareholders use that to settle their loans. So now you have an unencumbered share in a property that's lightly geared. Okay,
so really there are a number of investments, and if I can just expand on that, because I am a board director, is that the funds that are being raised through this particular investment will be used to channel into 2 new hotels, one in Greenpoint and one in Sea Point, one being 350 million, the other being 450 million. That will be up within and trading within the next 2 years in order to grow a substantial hotel-type operation that deserves to be listed on the AltX once the shares become tradable.
And I think it's worth pointing out that one of these facilities, one of these hotels, is actually already built.
Yes.
So it exists right now.
Yeah, so it's got to be converted into, with that, the finishing, the Solomon touches that needs to be added to this hotel. But I'm sure if any of you have gone to the PepperClub hotel, you'll see it's got every bell and whistle that you can imagine. Okay, just let's go a little bit more about the put. So now I'm an investor, I invest, and for whatever reason, there's droughts and people don't want to come to Cape Town anymore, and I want to now exercise my put. How does that operate in year? So that would be after year 5, whereby I would have enjoyed the tax benefit of the 450, assuming I invested $1 million. So it's a permanent difference. There's no recoupment in my hands as an investor. How does the put work?
It's very basic. We allow you to exercise that put in year 6 so that there's no danger of recoupment, as Jeff has said. The put is exercised at 55% of the purchase of the subscription price. So you've subscribed for shares of $1 million. You've got 450 back in taxes, and you owe 550. your loan may have rolled up to 620, as we said, but we are going to exercise that put at 550. Having said that, I don't think you're necessarily out of pocket 70 grand, because we have given you these 6 free nights a year for 5 years.
Yeah, but let's. I mean, the funding is a separate option. That if one
Correct.
went to the bank, you would be in. You know, whether you borrowed the money from the vendors or whether you went to the bank and did it.
Correct.
But if you just took the investment, pure vanilla investment, you're then saying that I invested $1 million, I got 450 back from SARS, and I can put it back for 550. Means that the investor comes out absolutely neutral.
Correct. That is how it's been structured.
Okay, and to the extent that investors took advantage of the funding option, there would be some roll-up of that, which may be about 70 grand, assuming that the hotel hasn't performed in excess of the guarantee. But so they would be out 70 grand, but they would have enjoyed
30 room nights
6 bed nights per R1 million
for 5 years.
for 5 years.
Yeah. So, the fact of the matter is, on those numbers, you've potentially spent 70 grand for R1 million of exposure, which is almost a free call on the upside.
Okay, so let's say now we don't want to use a put, because the put is just insurance money. Or you got it in case you want to do it. So I'm paying 70,000 maybe, but what happens if the hotel performs? What happens if the Cape Atlantic Seaboard or Cape Town, which has been the highest growing area for property in the last 10 years, just say that it becomes in vogue again? What does that mean? Assuming that the property performed at 6% per annum.
Well, I mean, you would obviously not exercise the put. You would just leave it to expire worthless, really. But let me put it to you this way. We've got a financial model. We're happy to share it. We've worked out that if you buy these shares at 1,000 Rand a share, which is the subscription price, and you exited the shares at 900 Rand, so you lost 10%, you would still do an IRR on your investment of 13%.
And what happens if you got the 6% per annum?
Would go to 18.4, and that excludes the room nights. You'd probably end up in excess of 22%.
And that's assuming that you got the baseline performance.
Correct.
Okay, so am I right? And what happens in terms of the sensitivity, assuming I didn't take the gearing portion, and I invested 450 or million, I got back 450. I gave the put of 550. I would have received the dividends during the course of the 5-year period, because there's no interest I'm paying, and I would have received the free bed nights. What's the IRR if I exercise the put?
I can't tell you that, but I think there's a document in everyone's folder. You're probably R1 million up in terms of hard cash. I think it's 994. You're actually up.
Yeah. So listen, I think I've done the exercise, and it's actually that you still got a positive IRR, notwithstanding that you exercise a put. That's assuming you didn't take any gearing, which is quite interesting, if I can say that. So we spoke about the free bed nights. Now, free bed nights, are they unlimited? Can you use them any time?
So you get 6 bed nights per R1 million. So, but I mean, we've said that we've given you these limits per tax-paying entity. There's at least one of you in this room who's got a client that's going to come in for 10 million through a company name, a trust, his own person. You could end up with 60 nights a year. The only 2 restrictions are you can't use them in the first week of Feb during the mining in Durban, and from the 20th of December to the 10th of Jan. I mean, the hotel runs 100% occupancy during those periods, and that's how you get this guaranteed return. It's from real performance.
Okay, so other than those 2 areas, you can use it anytime.
Yeah, long weekends, school holidays, and literally all the way up to what's sometimes a long weekend on the 15th, 16th of December. Yeah, sure.
And what I can also tell you, because I've stayed there a number of times, and they happen to stay in different rooms each time, that the rooms are large, they're comfortable, they each come with a separate lounge, they come with a separate bathroom. In some cases, some of them come with a separate toilet, and they have a kitchenette inside. So that's the most basic room. Comes with a lounge, a bedroom, a kitchenette, and a separate toilet, which is very, very interesting, I must say. Very, very comfortable
And
stuff.
well appointed.
Okay, so Amarish, this is all great. Okay, this I know that there was because it was so great. People are saying, is there, is this, are we contravening, any of the tax act? Is this in keeping? Is it in, with the spirit and everything? Can you tell us, in terms of tax opinions and all that type of stuff that I know that the PepperClub board have got?
So we were proactive. We knew people would think this was very interesting. So we have a tax opinion from an advocate in Cape Town, AJ Maria, AGM Tax Consultants. We have a confirmatory opinion on his opinion from a senior counsel in Cape Town as well. Again, that document's available to be shared with anyone who wants it. Milton, right?
Milton Seligson.
Yeah.
So Milton Seligson is one of the top senior silks in tax, specialized in tax in Cape Town. So he has given a confirmatory opinion on that, which we got in the first place from the tax advocate. Okay, so I think have we left anything out? I think we've covered a lot of space. I mean, I'm happy to take any questions. Should we take any questions? Are there any questions from the floor, and are there any questions maybe from the webinar viewers?
I have a question, Jeff. How much are you investing?
Ask me that after the questions. Correct.
So even, I mean, there's going to be no, how can I say, penalty to the investor, but the fund is not compliant.
No.
The fund will obviously get an equivalent or penalty of 100% of the deduction. However, the investor is not going to be, how can I say, affected if he affects it, if they don't have the option.
You're absolutely 100% right. The DCC would be penalized, but not the investor. You have a put. You've already received your 450 from SARS, and you would have a put back to the promoters at 550.
SARS doesn't pay that 450 back. Let's say someone has some tax implications with SARS and they thought they're getting 450, but they got some penalties at SARS and the rebate doesn't come through. And they've done this investment purely on the basis they're going to get the 450 back. What would then happen, because they've taken out that 450 loan, would PepperClub basically just cancel the loan and, how can I say, cancel the share? If the person doesn't have to pay back, or that person still be liable to PepperClub for that 450?
So let's put this way. We do not suggest that anybody who has a taxable income less than $1 million apply for this particular product. We also suggest that the people who apply for this product, that their tax affairs are in order so that they are going to get back their 45% that they've paid, whether it's PAYE or provisional tax. To the extent that someone's tax affairs aren't in order and they do not get that money back within 8 months, they would be responsible for topping it up out of their own resources. Then obviously then the promoters would have then they've got cession of the shares and that type of stuff which you will take back. Correct. Well, in terms of law, whatever they have, but the first, they're going to take back the shares. In that's their securities, the shares. There's no, you know what I mean, that's what it is.
So there's no other loss to the investor from that.
What he's getting at is, are we going to charge him the interest that's accrued on the 450 for 6 months?
Yeah, the interest is accrued on the bridging loan for the 6 or 8 months. There is interest rate, but it's a small amount.
Okay, so that's basically worst case scenario for investor. If he can't pay, he's going to land up with the 25 grand out of pocket.
Yeah, well, listen, I think but we really saying that anyone whose tax affairs are not in order
No, I understand.
should not apply for this product.
Okay, cool. Thanks.
It's important to cover the point about syndication because there might be taxable income spread across a company, a trust, a husband, a wife, etc. Could you just, help us with that, please?
Yeah, so in terms of the offer is a minimum of R1,000,000, but one has the ability to, if one had, let's say, a husband and wife who had less than R1,000,000, they could enter into a partnership. The partnership would own the share of R1,000,000, and the husband and the wife would get an individual tax certificate made out in their names, in which they can then apply against the taxable income. We also say that it's also, and we've had some investors who have invested through their own company, through their trust, and individual. So that you can have 5 plus 2.5 plus 2.5. So you can, there's some guys, if they're in that position, who have taxable income in their companies and in their personal trust, it doesn't mean that we will lend them 10 million, subject to obviously taxable income, and there is obviously some sort of credit check to see that you are who you are and that there's no black marks against your name.
The money that's raised on this issue, where will PepperClub apply that money?
So the PepperClub will be using that money to actually invest in the 2 new hotels that they're looking to develop.
So it won't go into this investment project because the investor will only be getting a return based on this hotel, or will they be getting a return based on the PepperClub's other hotels as well?
In time, they would get a return on other PepperClub hotels, but those other PepperClub hotels, one is in the process of being refurbished, which will be probably by next tax year we'll be raising for that year for that investment, together with one in Greenpoint also that will come online in some time during the next let's say 18 months to 2 years.
Thanks.
It's also worth pointing out that the funds are deployed on day one. So typically in a fund structure, you have this, what they call a slanted J curve, because you raise this money, you charge a fee, and the funds aren't deployed yet. These funds are deployed on day one.
So Jeff, so you're saying that any investor that invests in PepperClub now is basically going to have the opportunity to earn off the other hotels as well in the future. So it's not just only on PepperClub in
at this point in time, there is the offer is open for 300 million rands worth of investments into the existing PepperClub, and once the other hotels come on board, those 2 will be entered into or be aggregated into the portfolio. And when we exit, we would like to go to the market with a R1 billion portfolio that has got that's meaningful and substantial. So you would be investing into the PepperClub venture capital company, which is called PepperClub Invest, okay, Pty Limited. You would then, you subscribe for shares at R1,000 a share. You would get a share certificate, and you would have a tax certificate in the VCC. The VCC, in turn, invests into what we call qualifying companies, which are SPVs, really. And those SPVs will acquire PepperClub sectional titled units in the hotel, plus common areas, plus kitchen, plus all the other stuff that it's going to own. That gets wrapped around into a partnership which is managed by Solomon's Brothers Group, who have been managing the property for the last 10 years on a management contract. And with that, there is they earn 3% on revenue as a management fee. And should they exceed the budgeted turnovers as a performance fee, should they exceed the 7.6%. So at the end of the day, you're holding shares in the VCC, which is registered with SARS, registered with FSCA. It is a very compliant vehicle. The board of directors are the 2 Solomon brothers, Jeff and David. You got Mutli, which is the chairman, Amaresh, and myself. I think, listen, the PepperClub's a really interesting one. I think it's a performing hotel, and it's one that's well established. It's won prizes for the best inner city hotel for the last 7 years in a row. They have billions of rands worth of property portfolio. Not only hotels, they have a whole lot of other buildings. They own the Camp Space Strip and all the rest of it. And I can't tell you why they chose this one, but they approached us as Groves, and we were lucky. We went through a couple of rounds. Not easy. They're not walkovers, and we came up with a structure to offer to the market. Is there any questions from anyone on the webinar? No more questions? Okay, now Amaresh, you can ask me the question.
So why wouldn't you invest, Jeff?
So I know why I would invest. Let me summarize it if I may.
Sure. Thank you.
Okay. It's a 10-year operating hotel with a track record. Tell me where I'm wrong, okay? It earns approximately 30 million rand operating profit before tax. It's got 60% occupancy. In peak periods, I know it's close to 100% because I battled to get in. You are getting a guaranteed 7.6% over 5 years, and the underpin, or the guarantee is good because it's backed by the holding company of the Solomon Brothers Group. You've got a put option as it should something really, a black swan event happen, you've got a put event. You have, the vision is to grow a big hotel group in the Western Cape with let's say, a reliable and great track record of the operator. And most of all, they're lending me the money. So, so for someone who may, if you've got taxable income, you don't necessarily have the cash. Alternatively, you may want to take the cash offshore for whatever reason, because you see there's some political uncertainty. Why still lose that tax opportunity of 45% that I can take by investing in this particular product? So the short answer is yes.
Yeah, you're right. I mean, for me personally, the biggest thing is you get a shot at the upside without putting any of your own capital at risk. I mean, you have to take the geared option.
And I forgot, there's 6 bed nights per million rand as well. So, again, yes.
Yeah, I must tell you guys something. As Jeff said, we're raising 300 million. And if we give you 6 nights per million, on 300 nights, we're only giving away 1,800 nights. There are 200 rooms in 365 days, so there's 73,000 nights. We're actually only giving away 2.5% of the nights, so there's a lot of operational leverage for the income to grow in that delta between 60 and 97.5.
There's one question here.
Does that dividend get paid to me, or does it get paid back to reduce interest burden? And if so, what happens to the tax implications under it?
No, so firstly, the dividends firstly, it's 7.6 operating profit, and then there's tax on that type of stuff. Then they declare the dividend out to you. The dividend is tax-free in your hand, okay? Other than that, they take off a dividends tax in the individual, which is 20%. They declare dividend to you. Should you take the gearing option, that dividend that is declared to you, which is tax-free in your hand anyway, gets set off against the interest on your loan. So if you don't want to take the gearing because, 1, you're sitting with cash, 2, you can get it cheaper, 3, you want to use your bank or whatever, get miles, maybe, put on your credit card, you get paid the dividends annually. No, so there hasn't been a second. The valuation is to replace the property, but we did a valuation on the marketplace, and all properties and not necessarily 5 stars, are trading with, and in some cases, ex-VAT and without furniture in excess of 50,000 Rand a square. At the 497 mark, it comes in around about 50,000 Rand a square, fully furnished, ink VAT, and with the track record, no development risk, etc.
Sorry, last question. I noticed on this sheet that effectively the dividends that you on gross capital.
Yes, on gross capital.
So that 7.5% would be
More like 13.8.
776,000 rand.
Yeah, well, it's so I keep on saying that the 7.6 is operating profit get generated by the hotel, which then gets taxed at 28%, which then declares a dividend up to you. Yeah, so rolled up over 5 years, it comes to, assuming you invested 1 million, from 550 it goes to about 620. All settled, assuming that, yeah, it's about 620. Okay, guys, if there's no more questions, then I say thank you for your attendance, and I hope it was informative. I hope this helped you understand, 1, Section 12J. Number 2, helped you also sort out from, there's lots and lots of clutter out there at the moment. There's 170 Section 12Js registered with SARS, all looking for capital at this point in time. None of them that I'm aware of will lend you the funding to invest into the actual investment. So hopefully it helps you understand and make you make informed decision. So thanks very much, and thanks for your attendance. Please help yourself to some drinks, and there's some snacks in the corner.
Thank you.